Beyond the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with Carol Massar and Mike Regan. Welcome to our audiences across all of our Bloomberg properties, television, radio, originals, and those folks streaming on YouTube. Pretty wild day once again, Carol Massar.
Yeah.
It looks like we're going to finish in the green, though, at least for the S&P and the NASDAQ.
Yeah, absolutely. We talked about it earlier. I mean, we continue to see pressure on the bank names, despite Janet Yellen coming out earlier and talking about, deposits and seeming to be much more confident, or some confidence in terms of shoring them up should there be future problems. But you look at the regionals, Mike, they're down about 2.6%. If I look at the KBW Bank Index, it continues to be under pressure, down about 1.7%.
Yeah, Carol, it's interesting. What's doing worse than even the banks today? The energy sector. And it reminds me of how last year none of us could shut up about oil prices. And I feel like we got to talk to them about oil on the way down now. Oil back below $70 a barrel today. Looking at a trailing 12-month basis, oil's down about 40% compared to this time last year. The Bloomberg Commodity Index is down about 20% over that time. So, Katie, if we're all still worried about inflation, here's a very strong disinflationary push in the commodities and energy market that I'm thinking maybe is not getting as much attention as it should.
Yeah, I mean, it's a good perspective to have that you have seen energy prices really calm down here, but inflation's still very much a problem, especially if you're Jerome Powell. We heard that again yesterday.
We certainly did here. We're getting the closing bells here in New York. The clapping begins as we do see green across the screen. The Dow Jones Industrial Average going to finish the day higher by roughly 80 points as we wait for these numbers to settle. That's going to be good for about 0.2% gain on the day. Similar story for the S&P 500, which is up roughly about 10 to 11 points, or about 0.3%. 39.48 is roughly where it's going to close. The NASDAQ Composite higher by about 100 points, or 1% here on the day. Now, we should point out that the Russell 2000, the S&P 400 mid-caps, all moving lower here on the day, down about 0.4%. Of course, a big weighting to cyclicals and a big weighting to banks. Both of those main bank indexes, the KBW Bank Index, lower on the day.
Hey, Romaine, one group that definitely stayed in the green all day, although finishing off its highs. We're talking about those Chinese names that trade here in the United States. The NASDAQ Golden Dragon China Index up more than 5% at its highs today, finishing the day with almost a 3% gain. And Katie, a lot of it has to do with Tencent, a sales beat coming in better than forecast. And so that name alone was up 7%, almost 7%, and really helped lift the overall sector.
And if you look at industry groups as well, you had semis up all day. You had media and entertainment up all day. Semis in particular, NVIDIA has been having a great run, up for a 9th straight day today. Media, a lot of that comes back down to Netflix, the big rally that we're seeing there. Then you go down the list, and like we were just talking about, it's banks, it's energies. Those are the big losers on the day. Energy off by 1.4%, Carol.
You mentioned NVIDIA. It's up almost 90% so far this year. So we know it's been on a crazy, crazy run. Netflix, though, you also mentioned, Katie, and I want to go there because that is certainly top my radar here. Top in the S&P 500 and NASDAQ 100 throughout the day, finishing with a 9% gain, so just off its highs of the session. No real news. We did have some high volume, but the only news I did see rated new neutral over at Fubon, price target of $322 a share. Stock is just closing below that. So that is certainly on our radar. Want to get to Regeneron. This top name was also top in the NASDAQ 100 and the S&P 500. Has to do with an asthma drug, prescription drug that it developed with Sanofi, Dupixent. It showed some promising results in a high-stakes final stage trial for patients with a chronic lung disorder. So that's enough a rally in Regeneron, up almost 7% in today's session. Jeffrey saying the drug succeeded where others have failed, so that's why it definitely stood out. Carvana, it's certainly been on our radar this week, rallying again for a 3rd consecutive day. Oh, no, it didn't, actually.
So close.
Sorry, man, darn, I hate when that happens. Finishing the day down about 1%. It was up, folks, a lot in the past couple of days. Analysts continue to digest the online used car dealers' debt restructuring plan, so Sorry about that, guys. So 2 gainers, 1 decliner. Mike, take it away.
Yeah, and Carol, if we want to talk about decliners, of course, it's time to focus on the banks again. I'm looking at Comerica and Zions Bancorp, both down about 9%. This is after an analyst, talk about ripping the Band-Aid off. Truist Securities analyst Brandon King lowered his price target on 28 banks, updating estimates and targets to capture, quote, lower net interest margins, slower loan growth, and higher credit costs. For example, Comerica lowered that price target from 78 to 54, so some pretty big revisions there. Also, a couple stocks we've probably talked enough about today, but I'll tell you where they closed. Block closed down with a 15% loss. This is after Hindenburg Research released a report alleging the payments company facilitated fraudsters, especially with its popular Cash App. Now, Block is threatening to go to the Securities Exchange Commission and explore legal action against Hindenburg for what they call factually inaccurate and misleading report, but investors selling the stock regardless today. Also, Coinbase down 14%. This after they got a Wells notice from the Securities and Exchange Commission about potential violation of securities laws. SEC didn't say exactly what it was, but Coinbase believes it would relate to their staking services, their spot market, Coinbase Prime, and their wallet. So whole lot of different things. SEC Chairman Gary Gensler has repeatedly said that many of these crypto tokens qualify as securities that fall under his purview to regulate, Romaine.
All right, take a quick look at yields here. We're down about 14 basis points on the 2-year yield, 10 on the 5-year yield, though you did see a little bit of activity, a little bit of selling on the longer end of the curve, particularly when it comes to the 20 and the 30-year yields. You put it all together here, and you're starting to see significant steepening here on some of the main points of the yield curve. At 2-10s right now at -40. That's up from where it was just a few weeks ago when it was at -1% here. And that 5s-10s right now at one point in the day actually flirted with going back into positive territory. I do want to flag something to you guys here across the Bloomberg terminal just a little while ago. The latest update out of the Investment Company Institute on the amount of money, amount of cash flowing into money market funds. We knew that last week we saw about $121 billion flow into money market funds. In the most recent week, $117 billion, so almost matching what we saw in the previous week. 2 straight weeks. Put it all together, $238 billion of new cash flowing into money market funds just in 2 weeks.
And needless to say, that is an amazing amount of money, 2 weeks in a row. And then you think about what really was part of the spark of this banking crisis is the fact that you can get a lot more yield in a money market fund than you can on your deposits at a bank. So clearly, investors are still thinking about that coming into these money market funds in full force. And
at the expense of a lot of those prime funds. I mean, we're seeing the prime funds really take a beating here because, of course, they're exposed to some of the corporate risk there, unlike some of the money market funds, which are primarily government debt.
Yet at the same time, we've seen, investors moving into some of the big tech names, over this volatility that we've seen over the last couple of weeks. So it's interesting to see that and then cross it with a trade like that, Mike.
Yeah, remember how much we used to talk about the hunt for yield. Who would have ever thought that hunt would end up in the money market funds? I think there is a bull case for all that cash sitting in money market funds, though, Romaine, is that let's look at as dry powder that eventually might come back into the stock market.
Yeah, or might not. I mean, I know you're a glass half full kind of person, but I mean, that's a lot of money, and that's been the trend. And we should point out, this is just 2 weeks, and it's extreme, obviously, but the trend has been higher, really, for quite some time here. And I guess the question is, what is the catalyst that gets that, quote-unquote, dry powder back into riskier assets?
It's a great question. Is it a pivot from the Fed? Do we actually have to see them not just pause, but cut rates? I don't know. I kind of agree with Mike here that you could look at this and say this is dry powder. Just a fantastic amount of money has been stuffed into these funds. But remember, when you think about in S&P 500, we get back to 20% gains in a single year, which we were kind of getting used to, I would imagine that money might come out pretty quickly.
You know what the solution is? We see bank stocks settle. I mean, Jim Bianco had a great tweet on earlier and just talked about bank stocks breaking down again today and is kind of being cheeky, but saying, sure, glad the situation has stabilized. I mean, the point is we continue to see losses there. There's nervousness. I think investors still wondering, okay, now what? I mean, even Jane Fraser talking with David Rubenstein, Jane Fraser, of course, head of Citi, saying, there could be still some small banks maybe, that there could be some problems. I think We just don't know what we don't know in the banking sector, and that's going to be a drag until we have better clarity.
Yeah, and one of the issues is all the aggregate macro data for the banking sector that comes from the Fed is very far delayed. So we really need to see how bad this deposit bleed has been and get a sense of how bad it could be going forward. I think people are going to be parsing those Fed H8 reports a lot more closely than normal.
But this gets back to the idea of sort of what stops that bleed. What stops that bleed is higher rates. But that, of course, that means then, well, kiss your net interest margin goodbye. I mean, we were talking yesterday. I mean, KeyCorp put out their regular statement here. Their prime lending rate now at 8%, and they're not alone. I mean, most everyone else is in that same boat in the 7% range here. And the idea that the only way you're going to attract folks back is to raise that rate.
Right, exactly. So it's not easy, right? It complicates it all. All right. Obviously, we're going to continue this conversation. We ain't over when it comes to the bank situation. So we'll be back certainly tomorrow. Beyond the Bell, our cross-platform coverage, radio, TV, on Bloomberg Originals and Bloomberg YouTube. We will see you again, the Friday edition of Beyond the Bell, 4 o'clock, Wall Street time tomorrow.